How long do you need to buy and hold the S&P 500 to have a 2 out of 3 shot at making 6%? This is Bill Scheid from Applied Finance Research, and that's the question we're going to answer in this video. So let me tell you a little bit about the numbers that we're looking at here, the context we're asking this question in, and how we arrived at these data. So the question that we're answering here is one that is going to be featured in the book I'm co-authoring with R.J. Hickson, and it's about applying systems thinking to investing. So in part of the book, we ask, well, why would we bother to use systems thinking when we could just buy and hold? So we actually apply systems thinking to buy and hold itself to analyze some of the beliefs, some of the results that come about from buy and hold, and then that gives us a basis of comparison to choose whether we would want to use buy and hold or take a systems approach to investing. So in the book, one of the beliefs that we looked at is the old cliche, it's not timing the market, it's time in the market. I find that one so annoying personally. But here's the thing, if that's true, then the natural question that follows is, okay, well then how much time? In other words, how long do we have to hold if we want to make some money in the market? So to put some numbers to that, we asked, okay, well, how long do you need to hold the S&P 500 to have a 2 out of 3 chance, 2 out of 3, of achieving a 6% total real annualized return? So there is no 3 out of 3. So we just said, let's go for 2 out of 3. And 6%, you know, that's such a common target in the world of retail investing. And we wanted to use total real return because we wanted to include dividends and adjust for inflation. So the numbers that we have here use data from Robert Shiller. You may be familiar with him, Yale economics professor. And he reconstructed S&P prices going all the way back to the 1800s. Here we're looking at 1900 to 2025. And basically what we did is for every month since 1900, we calculated how your return would look if you held for 5 years, 10 years, 15 years, 20 years, 25 years, 30 years, or 35 years. And we calculated what is the probability, oh, it shouldn't say nominal here, it should say total real return. Probability of total real return greater than or equal to 6%. So that's good. I'm glad I'm making this video because I can correct that before that goes into the book. So let's look at what the numbers say. Basically, to answer the question, if you want a 2 out of 3 shot of making greater than or equal to 6% total real return, you have to hold for 30 years. Here we see the probability reaches 67.27%. So that's our greater than 66%. As you move to shorter and shorter holding periods, you'll notice that the probability of making 6% moves more and more and more towards 50%. And I think that's really, really interesting. I think there's a couple big takeaways here. So number one, if you're doing buy and hold and you want a 2 out of 3 shot of making that 6%, if you want to retire at 65, you better start investing when you're 35, because anything less than 30 years and your chances are much closer to 50-50. I was pretty surprised when I saw, wow, 30 years, that's how long you have to hold if you want to have a 2 out of 3 shot of making 6%. Now to me, 2 out of 3 shot is not really all that good, and 6% is also not really all that good. That's me, right? So that's my interpretation of the numbers based on what my objectives are, and et cetera, et cetera. When I run my Monte Carlo simulations, I like to look at a 95% confidence interval. So I have a 95% chance of making a minimum of X over whatever the sample period is. For me, 6% is pretty low compared to what we can do with our monthly systems. And the other thing that we don't see here, and this is going to be the very next thing that I research for the book, is in this 30 years, how many drawdowns do you have to go through to make your 2 out of 3 chance of making 6%? And I think that's a really important question. So one of the pieces of research that's on tap for the book is, well, between 1900 and 2025, how many drawdowns have there been of 20% or greater? How long have they been? Like, what's the average length and what's the min and the max? And then also, how deep have they gotten? And I think it would be really interesting to answer that question, because then we could say, well, yeah, you have to hold for 30 years if you want your 2 out of 3 chance of making 6%. But here's what you have to go through to make that 6%. I did some really, really rough numbers. I'm going to shoot them out there now, and they're probably going to be wrong because I haven't gone back and double checked it and been super thorough about it like I will when I do it proper. But just a quick look. I think we've had 12 drawdowns of over the last 120. Let me start again. I think we've had 12 drawdowns of 20% or greater over the last 125 years. So that gives us a drawdown of 20% or greater about every, well, let's just call it 10 years and change, right? So like 10.4, 10.5 years. So that means to make your 6%, if that number's right, you have to sit through, in 30 years, you're going to have to sit through 10 drawdowns of 20% or more. So I think that's very interesting and a pretty compelling reason to use systems thinking instead of buy and hold. Stay tuned. I'll be sharing more research from the book as I continue to crank it out. This is Bill Scheid from Applied Finance Research. Thank you very much for watching, and happy investing.